right, let me go ahead and get this link over to my X account. Market just closed, so we're gonna take a look at what happened today. All right, so what do I always say? Very straightforward. So today was a little bit of an interesting day for gold because we had this massive sell-off, right? So came in right around 5,500, dropped, traded back up right into the resistance. All right, so traded right back up into that resistance, sold off all the way, and pretty much this entire day just consolidated between 4,400 to 4,800, but the reality is it pretty much consolidated between 4,500 to 4,800 for the majority of the day, right? So ever since London session, it hasn't traded higher than 4,800, failed to really trade below 4,600. So the market is really trying to price in what gold should be valued at currently. All right. And in my opinion, gold is just looking to make a base and then eventually move up higher. So I went ahead and marked out the quarter, right? Quarterly levels from last week, Friday. So when we pretty much had this massive downswing, right? And as we can see, price has respected it on the open. So as soon as as soon as Asia opened, it tested that level, which is also the previous day value area low, sold off, took out the lows, traded lower, buyers stepped in, and buyers stopped stepping in right around that 4,700, and it's just been consolidating, right? No one wants to sell anymore and nobody wants to buy anymore currently. So depending on which way this market breaks out over the next few days will be very important onto how the rest of the week plays out. You know, if we start trading back above this previous day or Friday's value area low, which is still very important, whatever happened today is not as important just because nothing really happened in terms of price action. But in terms of last week, Friday, that's where a lot of stuff happened, right? That's where a lot of the selling pressure came in. That's where I think the most important values are. That's why I'm actually not going to update the value area high, value area low, even though I could put it on now, at least for today. But you'll see it's not too much going on. It's just very consolidated. So that's why I'm thinking if we do get a push to the downside, it's best to go short, aim for these lows. If we get a push to the upside, start trading above 4,900, go long, aim for the point of control, which is about 5,100, or the full rotation, which is around $5,275. And you know, eventually the target would for sure be 5,500 one more time if we even get back up there, right? So like always, we try to play things level to level, and right now we're just sitting at this $4,600 level without much of a pricing to the upside, right? There's just the market's just stagnant at the moment. So today was a day you would probably get chopped up if you were trying to go long or trying to go short. whenever you went short. It could have played out, but you'd have to really take profits at this area, this consolidation, which happened at London Open. Because that's just where price kept on reacting. And basically, as soon as 11 o'clock hit today, which was lunchtime, New York session, the market just stayed sideways. It didn't do anything. If you were trying to go long on calls, you got crushed because of the time decay. Same thing with shorts. Right? If you entered puts, you would have gotten crushed. There was only one trade to be made as soon as New York opened at 9:30, and that was a short trade based off this 5-minute supply level here. All right. I call it micro. All right, this 5-minute supply level, that could have been a trade, pretty much the only trade and the best trade of the day for gold. All right. So knowing that this trade here for gold, was the best trade, right? This micro 5-minute supply level. A lot of people might have went long once price swept these lows. They might have held trying to go higher, put a stop below the low, and this would have just been a trade that didn't really play out the entire day. If they got long on that close right there, they would have just ended the day in profits, right? If they were smart, they would have probably took partial profits on this impulse to the upside. But yeah, very neutral day for gold. So what does this say? Where are we looking at in terms of what to expect over the next week or so, right? So let me go ahead and hide a lot of these levels. I'm going to keep that on there. So we have last week, high, low, last month's high and low. Let me see this monthly. Interesting. So I didn't take this wick into consideration. Probably happened in extended trading hours. No problem. But yeah, so based on last week, we're still trading below last week's lows. Massive breaker, right? Or bullish order block. Because as you can see, price did respect that open, right? As you can see here. So price respected it, and then impulse higher. Even the sell-off came down probably right to the 50% off this order block. Yeah, so pretty much right there, which is very interesting to see, right? Tested it. Almost exact. And then came up. So the respect is very insane when you start to think about it with some of these levels. Something to keep in mind. But yeah, everything's still pretty bearish after that super bearish day. This is now a confirmed daily fair value gap. All right, so a lot of people are going to be looking at this as a level for a trade. Price to move up into it, see a sign of weakness, take the trade back down to at least take out these lows. All right. So, as I was saying before, fair value gap right there once today closes. A lot of traders will be looking to trade this level once price moves up, shows a sign of weakness, and short it down to at least these lows. Very important lows, equal lows, as you can see, where I'm sure there's a ton of liquidity resting, right? And that's going to be one of the biggest trades, in my opinion, over the next few days, next few weeks. So let's go ahead and jump down to the 4-hour. You'll notice on the 4-hour, we created a swing high. Let's go ahead and hide this stuff as well. All right, let me even hide this. All right, so 4-hour swing high created if we wanted to go ahead and mark out that level. And we have this 4-hour swing low. So in my opinion, the two most important levels This was also a very bearish order block, 4-hour order block, which came in here, right? Mitigation block, whatever you want to call it. Let's go ahead and update that. All right, so price came right into that bearish order block, rejected it, and sold off pretty much for the day, right? You do have a daily swing high here. I mean, a hourly swing high right up here, which is something to keep in mind because with this level here on gold, this swing high, it's right at the 50% of that 4-hour bearish order block, right? So it's coming in right at that high. So with that being said, that is definitely going to be an area to keep an eye on. Let's go ahead and put this as a swing failure pattern level. All right, could even add an alert there. That's what you have to do, just mark out the levels you want to trade, right? Not every single level is meant to be traded. This is a 4-hour swing high, again, right into the bearish order block. So this is for sure going to be another level where it might be worth getting another trade from. So I'd either be looking to short gold at 48.37 if we get a bearish reaction. And if we don't, the next area is 4900 if price starts to look bearish once again, right? Take it down to these lows, right? That would have to be the target. Or locally, you know, this could be the first target, first take profit, second take profit. Or if you want to be more aggressive, you can take profit right in this area because that's a lot of consolidation, pretty much an entire day of consolidation right there. So price is going to react here no matter what if we get the move up first and it comes down back to that level. Just have to keep that in mind. And this is on the 1-hour time frame. So let's go ahead and jump down to the 30-minute. And it's pretty much going to be the same. Let's go to the 15. Pretty much going to be the same. Yeah, so as of right now, no trades for gold. All right, you just have to wait for these levels to be tested. And once they are tested, that's where the next best trade will come into play. It could even end up being the high of tomorrow or the low of tomorrow, right? If one of these levels are taken out, so you have to keep that into consideration. Now, what's interesting is when you start to pull the 50% of a lot of these levels, right? So on Wednesday, high to the, let me see here, pretty much Thursday. So Thursday trading range, right? 50%. Markets closed here, opened up back in the premium, and then began to sell off, right? So open in the premium, very bearish breaker, right? Price came back up, couldn't even trade above the VWAP, sold off again. You could have probably went short there, anticipating it's going to aim for these lows. And then throughout the day, yeah, that's what it did. Just eventually ended up taking out those lows, which ended up being a pretty epic, crazy trade on a Friday if someone was able to get into that. I was not trading that at the moment, but if you were able to trade that, congratulations, because that's a very nice trade, right? So 50% is very important. Right? It's just something to always keep an eye on, because when you have, for instance, a uptrending market, right? Sometimes you don't get that 50% pullback, but if you do, it is something to keep in mind, right? So here it was hard to really gauge that 50% because previous day's lows never got close to previous day EQs, right? But here gave you that opportunity. If we went from the low of the day, which was, let's see here, including after market hours, to the high, the very next day you see it opened up, well in discount, came back up into the premium, came back below it, and showed no willing to trade lower after it reclaimed it for the second time. Right? Then you could have at least went long once you got a retest of the 50%, maybe a break above this down close candle. As you can see, price did respect that level. All right, traded above it, letting you know, okay, the market is looking a little bit more bullish. You start to get closes like this, maybe you long. Of course, it's very close to the all-time high, but you'd put your stop right below these lows, and it would have played out, right? It doesn't always play out like that, but when you're anticipating higher prices to come, sometimes those are just the trades that you have to take. If you wanted to be a little bit more aggressive, you would obviously then long right here around the tap of this bullish order block, and then you would naturally aim for these highs, right? And then price just would have exploded through that high. You'd have probably held it due to one-time framing, right? And maybe you would have sold here because you got a little bit of a pullback. But if you were to use your bearish order blocks or bullish order blocks, you would know, okay, well, I'm just going to stay long until one of these are violated, which means you probably would have got out right here because it started to trade below, right? Maybe if you're really paying attention, you would then say, okay, well, we got to close below. Let's just see what happens at this level. Never even got to that level, traded back above it, right? And then same thing here. Another bullish order block, price stayed above it, good to go. Another bullish order block, price stayed above it, tested it multiple times, went to the 50%, aim for the highs, price got there. And this one would have been a harder one to keep, right? Just because you had a liquidity sweep, very big sell candle. But yeah, price just reversed and kept on going higher and eventually even gapped up. And then this is where we were on Friday. All right, so something to keep in mind. Same thing with these downtrending markets. So we have the 4-hour bearish order block. If you want to, you can always even just go down to the 1 hour, right? But that's not really the same. So yeah, just leave it as the 4 hour, just because the 4 hour is very clean. You can see right there. Got the retest. And then you got the sell-off. So just got to trade the levels, trade the range. Of course, there's a local range right here too to keep an eye on. All right, you can see what happens at this level. You can go ahead and also pull your 50% tool to see where that lines up. And look at that, the 50% is right there at that level. If you want to make sure you're not longing in a premium, you can just go ahead and divide it. Technically, then go ahead and cut this in half. And then the discount of this little range would be down here, right? This is where you'd rather long. Up here is where you'd rather short. And if you did that, even throughout the day, you would have got a nice little short here. Nice little short here. You'd wait for price to come back at least to the 50% of this little mini range, which it did a few times. And it reacted there pretty nicely, right? As you can see. So you got a reaction there, reaction, very sensitive, right? Lost it, didn't get close there, came back up, held it, got a reaction, got a little reaction once again. So it is something to keep in mind for sure. And then you can do the same thing when it comes to Bitcoin. Bitcoin, Ethereum. pretty much anything. See, a very straightforward here. I'm just gonna let this rock out over the next few hours. Like I said, most important levels to watch right now is 4,900. Up to 5,000. And the respect of these levels is very interesting. Just look at that, right? Wick to the top of it, wick to the top of the 75%. Came back inside. So very interesting to see. And just very interesting to see how it plays out for the most part. But that is pretty much it for gold. So remember to like and subscribe. Follow me on X. I try to post updates pretty often. And leave a comment below. Thank you for joining. Take care.